when you're looking at overall economic policy and you want more prosperity for a country, you have to consider these five major policy areas: monetary policy, trade policy, regulatory policy, rule of law, or sometimes I call that quality of governance. And then you have fiscal policy. And by the way, fiscal policy isn't just taxes, it's also government spending. So if you have a government that's far too big, say consuming 30, 40, 50% of your economy, yeah, you could have a flat tax, but your flat tax rate might be 40% or something like that. So you have to make sure you're looking at all of government policies. And if you get those policies right and you have a flat tax, you can have a lot of prosperity in your country. And that's why I sort of divide economic policy into these two big categories. What is the appropriate role of government, the classical liberal vision of a small government, or the welfare state vision of a large government? And then on the tax side, how should that government be financed? Is it a broad-based and low-rate system like the flat tax, where you minimize distortions, or do you use the tax code as a sort of a form of social policy or class warfare? These are some of the big issues that are involved in fiscal policy. But let's focus on the reason that you want a flat tax. You want a flat tax because you want a low tax rate, because what is a tax? A tax is a price that government is imposing on whatever is being taxed. And so the example I use when talking to American politicians is they often, they bang their fist on the table and they say, we need high taxes on tobacco and alcohol because we want people to smoke less and to drink less. Well, that's economically, that makes sense. But what I tell those politicians is you need to apply that same lesson to taxes on work and entrepreneurship and other forms of productive economic behavior. And the academic research shows that if tax rates are below 20%, by and large, people still have good incentives to be productive. But you also, as you see on the second bullet point, you want to have no double taxation. And I'll explain what that means. But what you need to keep in your mind is that you don't want to penalize people with extra taxes on saving and investment, because every economic theory, even Marxism, even socialism, every economic theory agrees that you have to set aside some of today's income to finance tomorrow's growth. And then, of course, you want your tax code to be neutral. You don't want backdoor industrial policy. You don't want cronyism. You don't want politicians giving special low tax rates to their friends and political supporters, and then extra high tax rates on things that they don't happen to like. That makes the economy very inefficient. Now, when I mentioned having low tax rates, this ties into something that Federico said in the introduction. If you have a low tax rate, people have a better incentive to comply with the tax system. If the government is only taking one out of every $5 or euros that you earn, you might not like that, but your incentive to obey the law will be much higher than if the government's trying to take 3 euros or dollars out of every 5 that you earn. So a low tax rate improves tax compliance. People are more willing to both earn and report income. And again, I want to underscore the point that 20% tax seems to be a real important cutoff point. Tax rates below 20%, people are willing to pay those. Taxes above 20%, you have much, much bigger incentives to earn less income, to report less income, to go through various complicated maneuvers to protect yourself from government being too greedy. Now, that's why you want to have low tax rate. That's principle number one of a flat tax, and it's the one most people understand. In America, we've had this discussion about having a 17% flat tax, and most politicians, they only understand the 17% part. But I want to discuss now, by the way, before I talk about double taxation, here's a visual that I think explains why it's important to have a low tax rate. You imagine a taxpayer deciding, should I work harder? Should I sacrifice my leisure to try to earn another $1,000 or 1,000 euros? Well, at a very low tax rate, yes. But as tax rates get higher and higher, of course, that individual worker has less incentive to be productive to create more wealth for the economy, to make the economy stronger and more competitive. So again, keep tax rates low. And I gave the example earlier about politicians understanding this when they talk about taxing things like tobacco consumption. Well, here's a meme that I think makes a very important economic point. If politicians understand that high taxes on cigarettes deter smoking, why don't they understand that high tax rates on work will discourage working? And we don't want to discourage productive behaviors. We want people to be more productive, to contribute more to the economy, to create more wealth and make a country more competitive. So it's important to keep tax rates low. But now let me talk about double taxation. In many countries, and of course it depends what country you're in, and I'll give the United States as an example because that's where I am. But in many countries, if you immediately consume your income, your taxes are low. But if you save and invest your income, your taxes are high. In other words, the tax code has a very big penalty on saving and investing. And I'm going to show a flow chart that's going to look very complicated, but I'm going to make one very important point. The left side of the flow chart shows what happens if you consume your after-tax income. And you see that there's no additional boxes of taxation. But on the right side of the screen, if you save and invest your after-tax income between the capital gains tax, the corporate income tax, the double tax on dividends, and the death tax, you can be taxed over and over and over again. And what that does is it tells a taxpayer that your taxes are low if you consume right away, your taxes are high if you save and invest. And as I said earlier, that makes no sense because even the socialists agree that you have to have saving and investing to have future economic growth. Now, they're wrong in that they think the government can be in charge of the investment and stuff like that. But every economic theory, literally every economic theory agrees you have to have saving and investing to have a future prosperity in your country. And yet in most countries in the OECD and the EU, they have these very heavy penalties on income that is saved and invested. And that's a dumb idea. Now, this flow chart looks complicated. So when I talk to politicians and try to explain this to them, I create a very simple example. I tell them to imagine that their business is running an apple orchard. And then I ask them, what's the best way to harvest apples? Do you pick them from the tree or chop down the tree? Well, of course, it's a very bad idea to chop down the tree because then you don't get apples next year. But that's in effect what taxing, overtaxing, and double taxing, saving and investing does. Now, you're not chopping down the whole tree in this example. It's best to think of it as sawing branches off the tree. But the important thing to understand is that the tree is capital, the apples are income from capital. So if you must have an income tax, yes, tax the apples. Do not saw branches off the tree because that means you have less income in the future. That's very, very important. And it's one of the things I constantly try to explain to politicians. If you're doing a flat tax, do the comprehensive, well-designed, Paul Rabushka flat tax that the experts at Hoover, at the Stanford University's Hoover Institution developed. Now, the third principle is you want neutrality. You don't want government picking winners and losers, industrial policy, special favors, all these different complicated loopholes in the tax system. And by the way, how many are there? Let me show you a slide. And this is 10 years old, by the way. It shows the number of pages in the US tax code. So I don't know how bad it is in other countries, but from when our income tax was first created in 1913 with only 400 pages, we're now well over 70,000 pages. Now, it takes one page to say this is the tax rate. Why do we have 75,000 plus pages in our tax code in the United States? We have 75,000 plus pages because politicians have spent more than 100 years creating special loopholes and penalties and credits and deductions and exemptions and exclusions, all designed to, in effect, try to steer the economy. I mean, everyone knows that the Soviet Empire failed in part because the government tried to steer the economy in a macro sense. Well, what's a complicated tax code? A complicated tax code is just a backdoor version of trying to do the same thing. Now, fortunately, not nearly as bad as what the Soviet Union did, but you don't want complicated, corrupt loopholes in your tax system. And by the way, I said corrupt for a reason. When politicians can buy and sell special favors in the tax code, it creates this enormous ability for corruption in your political system. So the three principles: tax at a low rate, don't double tax saving and investing, and don't have corrupt and distorting loopholes in your economy. You do all these things and you have a flat tax. That is why a flat tax is so good for growth. It's not just the low rate, it's also getting rid of double taxation. It's also getting rid of corrupt and distorting loopholes. And with that, I'll go ahead and close out my presentation. Hopefully I didn't, I think I went over a little bit, but so much important information to share on these issues. So thank you, Federico. I'll turn it back over to you.